All right, guys, how are you doing? Are you ready? Let's do this. New week, new opportunities. Let's get into it. This is going to be our greatest week ever. I believe that. And I believe that for you too. Right, with no further ado, I give you Tope. Take it away.
Hello, everybody. Good evening. I hope you can all hear me clearly. And let's hope that today goes smoothly without any technical hiccups. Said this week is gonna be one of the best and most amazing weeks ever before. I believe so as well. Our confession goes a long way. So tonight we're gonna be going through some analysis like we always do. Excuse me, there's an echo. Just hold on. Let me just check something. Okay, let's try this again. Okay, no more echoes now. Everything seems to be fine. Can you confirm if it's better now? I think it's better now. I think it's a lot better now. Okay. The echo is still there. Should have gone now. Still, I don't know what to do about that, to be honest. It's a reason it will be nice to carry my volume. Okay, let's just carry on. I think Israel is working frantically to help us behind the scenes. Okay, so without further ado, let's go through to our weekly analysis. And I think it's been really amazing because for the past few weeks, I've they all just gone, to target. They've just been working like clockwork, to be honest with you. I'm going to start on weekly. Last week, definitely I was looking at this highway here for us running to that high, and then for us to maybe expect something to happen from there. I'm looking at a week high, last week's high as well, which we took last week. So I'm talking about a week ending 28th of July. Last week, week began. I was looking at the week high, 28th of July. Because of all the liquidity loss, it's also a key level. Here's another high of it here for the week. The reason why we're looking at the highs of the week is because as we are currently learning, we understood those levels are key levels in that those left makers would like to, turn the market, would like to do something. Okay. As we can see, the weeklies have been closing bullish, closing above previous week is a good sign. And I have this weekly
Hey,
high
Tope,
over here,
Tope, one
which would be
second.
a
Can you
very
hear me?
good area. Yes, I
Hello,
can hear
Tope, can
you.
you hear me? So your voice is distorting. Your voice is distorting.
Okay.
I'm not sure what mic you're using, but it's distorting.
Right.
Could you use the one you finished last week with, please, if possible? You switching it over? Hello? Hello?
Okay, how about now?
That's a whole lot
How
better.
about, is it still
So
better? Is it
take the
better
volume up a
now?
little bit, but I think it's better.
Okay. All right, all right. Ain't no technology stopping me. Okay, so as we were saying, we were targeting those weekly highs. If we just want to be a bit extra on the analysis, we can go to monthly to see, what highs are there. And this is a really, really good one here that we just ran, that we took out last week. We went on the weekly again. You can see that very high one, the highest point, took it. Um, Now, what I'm looking at, if we dropped to the daily, you can see already we've taken last week's low. But I'm suspicious that whatever they want to do, they will still like to drop to this weekly high, significant weekly high over here, the 20th of June. They would like to come down if they want to continue this rally up. Okay, they come down before they go up. But I will show you something I did take. I took a trade from, so as you can see, look at the daily rolling down nicely. Um, I took a trade from this low today, and it was just for quick. I think it was quick 20 pips or so. Let's make that all right. And the reason why I took that was because in the back of my mind, I am still having a bullish direction. When we go on US dollar, we see what's happening with the collision, but I still have the bullish in mind because I've not had this foolish, these full bearish. I had an engulfing daily candle, I had a day candle close below previous day, so I could still take that more. I don't use the word gamble, but I can take that risk and the good one. Then drop down to a 15-minute
Hey, Tope,
time frame.
Tope. Um, your
Yes,
voice is still distorting.
yes.
Can you jump out the room and jump back in? Can you jump out of the room and come back in,
Okay.
please? Sorry, guys. One quick second. We will get this right, I promise. We just need to be sure you guys can actually hear what is being said. So just give us a quick second. Okay, let's see. He's trying to come back in. All right, let's try this now. All right, Topka, let's try this now.
Okay. How does he sound better now?
Keep talking.
Okay. So as I was saying, went into a lower time frame on the Aussie. I think I checked on the H1 first, and then went on 15 and 5 minutes, and saw this cheeky bullish, this engulf on the 5 minute. I just went in straight away. So one to this final candle over here, when this candle closed above this bullish, this bearish candle, I just went in straight. The reason why I took that, I mean, I wouldn't advise you to take such a trade now. It's just based on obviously experience and you know my risk appetite as well. Because I knew I could easily get, I think I was going for about, I think I was going for 40 pips or something like that, or 50 pips. Yeah, 40 pips there. So I got in there and jumped out there. I did the same thing with Kiwi. This kind of set on NZD USD. But my idea now, my thought on this pair now is that if by the end of close of play today, 10 p.m., if it doesn't look like it, but if we fully close below, if we fully close below yesterday's low, I mean Friday's low, last Friday's low. Let me move this, bring it here. If we close below that low, then I will start looking for opportunities to go south. But at the same time, I would also be looking at our number one indicator, which is the US dollar. Okay, and if I'm going to be trading this south, I'll be very careful because I'll be watchful of this weekly swing high because you see prices being here one time and we took off. So I'll be looking for at what price is going to do at that level. So based on that, my entry short is going to be I'm going to be very careful with that entry short. Okay. So at the moment, if we decide to switch to H4 to look for our setup, it looks like something is in the picture. So let me draw that out. If you see this swing high on the H4, okay, swing high on the H4, and then do we have a market structure break? Let's look for that. Let me zoom in, make this bigger for you guys. So this swing high over here, and then a market structure break. Look at this level, this swing over here. Okay, this swing here, market structure break. So now what we would expect to set up is to get ready for us will be today's high, which is over here. Let me just put a circle or a marker on it. No, where's my tool? Okay, that's what I'm looking for. So today's high, which is going to be over here, this level here, that level there. So price is looking like it's going to close, is looking like it. It's going to close below yesterday. So what we'd expect is the high setup here. So today's high, tomorrow we'll see some sort of dance down, and then price should rally up to give us that intermediate high stop hunt into this beautiful H4 bearish order block. Okay, let me clean this out. So this is what I would expect. I would expect, let me go to drawing mode. So I would expect price to do this. Yeah. So we already have the high over there. Take out that high, come down a little bit, go up into this other block, and then expect a drop fall down to that weekly solid swing high on the weekly. Okay. So if that happens, that'll be beautiful. But it sets up nicely. It's looking ripe. Okay. It's looking like a nice setup for us. So if we just talk to our strategy, so this is going to be a daily high. So that'll be an intermediate level high for price to stop hunt. So we'll see the drive above, take that high into this H4 order block, and then start the decline down. And the first, target I'll be looking for will be this blue line. Remember, that line is from the weekly swing. It's a major swing high on the weekly. Okay, so that'll be first target. And if it does that, then we can continue looking for. When it does that, depending on how strong that level is, it could hit price back all the way up and break this high, whatever it is. But if the move up is just sluggish, we know that we're in for more down. And then if you're having bearish engulf on the daily, that's giving us full confidence that we've changed the market direction. So you could look for something like this. Okay. So that is the Aussie. Let's go to the next pair. Euro USD. Okay, for Euro USD, I'm holding a trade long for that at the moment. That's just what I'm doing. Okay, and I'll tell you why. Let's go back to weekly. On the weekly, we have a nice target's been hit. Blue target been hit nicely. Look at that, the weekly high over here. And then there's another one here that was hit. So everybody that put their stops there, saying this is a solid resistant area. So they'll put their stop there, or they want to break out. So price would have taken them out. There's another area here, another high over there, and there's another weekly low there. Those kind of areas are good. And look at that's where it hit nicely and it's turned. Okay. Now I remember I told you this some time ago, but I don't know if you remember. When you see a weekly candle or daily candle without wick at the bottom, or the wick is very shallow, okay, just keep an eye out. You can use that for target in the future. They'll come back and take it, okay. But my explanation for taking a bullish trade, okay, if you go back to daily, all my dailies, the candles have been closing above the previous day. So they're engulfing, bullish engulfing, okay? And in my opinion, I'm saying, okay, I'll still look for a bullish trade based on that. And then I decided to enter a trade long from, look at this low over here. There's two lows together. Remember last week we started talking about significant or key levels, okay? Key levels. We're talking about the highs, the lows, opens and closes, okay? Let me zoom in to see this properly. All right. So that's what I saw. Plus, there was another there was another level from the week daily that gave me confirmation. I need to scroll back. I think it was this. Oh, let me change the color. Excuse me, hold on. Okay. Hello. I've turned it to the highest level. Okay. Right. Excuse me, I'm back. So that area which I have put the Gerald, you're asking what do you mean when you say you entering a trade long? I've entered the trade long. I'm not entering. I've entered it, and the reason for me to enter the trade long was because we had consistently been having bullish engulfing days. Okay, okay. If you know, look at all these days. They've been closing above previous days, closing above previous days. And when I got here, today is Monday. Israel might not like to trade on Monday sometime, but if I see the opportunity, I'll take it. This one in for about, I think, did another 40 pips or so from entry. So I closed that out. That was nice for me. 40 pips, I was out. Um, if you went to a lower time frame, let's go to H1 first. So you have seen, no, where did I went to 15 first. So my first entry was actually not on 15, it was actually on 5, but the concept is the same. So when we are on H1, we're saying H1 engulf. So the H1 candle should engulf the previous candle. The entry will be on your next candle, dropping back down into the candle that was engulfed. It's the same thing I did um, on a lower time frame, just because I was sure and confident that the trade was done, was going to take place. Because yeah, and I got in here. So this is the entry candle. Okay, that bullish candle closed above these two bearish candles. I just entered on the retrace for long, and that was the outcome. You can see 50 pips. I was done. I was out there. Um, no, I'm still in on this actually. I'm not out yet. I'm still in on this trade. I'm not, but there, that's my desired entry. I've moved my stops to break even, so I can't lose on this. Maximum will be I'll leave with nothing. But yeah. But the reason why I've decided to go long was because of the daily time frame. Okay, the daily time is very bullish. Friday, yes, came down, but we came down into a significant level um, until I see a daily candle close and off the previous day short. Then I'll say, okay, our move is I'll be then putting all my eggs in the short basket, if you understand what I mean. Okay, so but as this trade is moving, I'm not gonna hold it for too long. Maximum when it's 10, I'll close it out. Why? Because if we move to our H4, okay, if we move to our H4, do we have a possible setup? Do we have a possible setup? So if you go to H4, okay, this one you can say we got stuff on two sides. Um, but this to me, I wouldn't call it yet a stop hunt. We've kind of had a market structure break south, but that market structure break looks also like a stop hunt. Okay, but this will become a stop hunt if today closes above. Doesn't if today It's looking like it's gonna close below yesterday's low, but it's very, very close. It's very dicey. So with Euro USD, based on our H4 setup, I'll still say we should hold, but it looks replica to AU that we just did. So this is a high, okay. The red line too is a weak high, okay. We've gone past that high, came down, broke structure over here, a return up past today's. So if today closes where we are now, so that means we have a daily high set up here, just like our AU, and then we could be expecting something when price gets to this bearish order block. So that means we have set up on our 1, 2, 3, 4 setup. We'll have an intermediate high of today, which will become yesterday when we move over to 10 o'clock. So we'll then have this intermediate high for price to rally through to hit, take out stop and hit this order block. Okay. But remember, we're just not going to trade it blindly. When price gets to this order block, we'll wait for our confirmation candles before we do anything. Okay. For price to drop, further possible down to another daily high. There's a big daily high of it that's not been tested. That daily high is been tested there. So this is the one that has not been worked on yet. So we'll be expecting if price hits that level, we'll wait for all our confirmations on the candles, engulfings, the retrace back to 62%. When we see a market structure break 62.8 or 70, a level fib retracement, and we can take the trade down. Okay. So that's what I see in the short term for Euro USD. I'm not taking a look at dollar yet. So who knows? This rally up could become this like this. It could break that level totally. It could break that bearish order block totally and go for that high, that weekly high over there, and then we can then see a turn down. Okay, then that would mean this market structure break will become a stop one. So it's a reverse. It'll be a reverse order. Yeah. Right. Let's go to the next chart. Pound dollar. Let me clear the chart. So we go on the weekly again. I took some 50 pips out of pounds as well. So on the weekly chart, we have, I still think, look at, let me bring your attention to this level. Can you see these levels over this high and that high? So the high of March, 9th of March 2020, the high of February, 3rd of February 2020, the high of January 27th, those highs, they're very, very close to each other. What do you think will be placed there? It's like we got a double top. That's how retailers will call it, double tops. What do you think will be at that level? There will be a lot of stops resting there. Okay, there'll be a lot of stops resting there, and that is why, for me, I decided to still take a bullish trade. And you see another reason why. Look at why. If I drop this line on Thursday's high, okay, look at this day, 29th of July. Remember our key levels again, highs and lows, open and closes. Okay, all right. So this high, I've dropped my daily candle on that high. Yes, Thomas. Entering long means you're buying, and entering short means you're selling. That's correct. Okay. So we see price dropped to this key level. And again, these things are very simple for you to mark. Go on your daily or your weekly chart, drop a line on the high, on the highs and lows, okay? The reason why this one is significant is because it's the most recent high that has not been reused or tested. If you look back, if you look at this high, the high of the 28th, I think that might be Wednesday. Okay, so this is Friday, Thursday, Wednesday. The high of Tuesday was used on Thursday. Okay, look, they touched it. Check out your price action there. Boom, you take the trade long. Okay, look at this level again. This will be should be Monday or Tuesday. Monday's high. Look, they've not tested it, but you understand what I'm trying to say. Those levels are very significant. If you look here, this high, look, they used it twice. Okay, this daily high, okay, it's not been used yet, but they do that all the time. Once you see price drop to that level, and then you observe your price action on a lower time frame, your entry time frame, you should be good to go. Once you see that favorable setup, okay. So it means if you get on your 15 minutes or your H1 and you see your engulfing candle there, you take the trade. You take the trade. Like today, like I said, GU, I was already out. I took the trade from here. Okay, took the trade from there because at that same price level, I had this beautiful, aggressive, bullish engulfing. Look at that. Boom. Closed up 1, 2, 3 bearish candles. That gave me all the confidence I wanted. I put my pending order there, triggered, and I got my, I think it was 50 pips or 40 pips. Yeah, look, 50 done. 50 pips done. Boom. Okay. So let's go back to daily. So I'm still suspicious that we'll still see a move up to this blue level, this blue line. That's 32071. And why is that? Because we have look, why would they leave this with this level? Why would they leave it? A lot of people are putting stops there. People that got the straight from the top there, moving, they will have put their stops there. And there's also a good area for people that trade breakouts. They will have said this level is a double top. Price gets there, it's an amazing level and that stuff. Okay. We also have last week's high here. So even if you don't want to take it all the way to the very top level there. You can take last week's high, okay? Last week's high, 31764 is another very good level to trade off, okay? So if you decided to go on the H4 to see if we have our setup, no, we don't have a berry setup. Everything still looks bullish. This is a nice retracement back to that daily high. Look, price action, is going long. We even had the H1 and golf, excuse me. So we can see prices stored at this area now. Excuse me. Please, no noise on the line. Okay, so now at this bearish H1 order block. Okay, so it might hold price down at this level. Who knows? It might hold it down at this level and then have one more retracement back. Um, just a slight retracement down before it pushes up. But I'm still suspecting a run up to this level at least. and 1.31736. Okay, that's what I see would happen. So let's go to the Kiwi. All right. So as always, we start from weekly. We got this nice level over here. So last week took out the previous week high away, took them out, but prices dropped on this level, which is the high of 3 weeks ago. So the high of the 13th of July and the high of 6th of July. 6th of July is more pronounced there, but you can see it's done so actually to 13th of July. It's dropped into 13th of July. Based on the weekly scenario, you can see the 20th of July was a full bullish engulfing, okay, which is a signal for continuation long, okay. We have these highs to look at. Price could take this out. Let me see if we go to H4, monthly, if we have any levels lurking, okay. Even on the monthly, it's looking bullish. So last month, July closed above the previous month, June. Okay. And we have those two lines that I just drew now, they correlate. So it's the first of June high. So June's high, and we have July, a week, one of the weeks in July. That's the 13th of July's high, and prices dropped into it. I believe this could be a very strong level. And also, this bearish candle here looks like a bullish order block on the weekly. Okay. So we have a few things lined up there for us. We have number one, the month's previous month's high, June's high rather. We got 13th of July week high. Okay. And we also got a bullish, a bullish order block. Okay. And all of that should be able to give us some nice reaction here. And if we went to our daily time frame, you can see again at that same level, you also have a bullish order block on the daily here. Did price touch it? Certainly did. Draw that out. It touched, kissed it nicely, and then we could look for a setup in here to go long. Okay, to go long. We have a H1 and engulfing. No, we didn't. Okay, so this one you could wait for a setup. Okay, if we went on the H4 to see if we have anything happening, it looks like we got something good happening here based on our setup. You can see this high over here taken out, and then we have a very strong market structure break. Although the market structure break happened into a bullish order block on the daily, but whatever the case may be, it will give us some sort of reaction, which is already happening. So worst come to worst, the same setup that we are expecting on EU and AU, if it's gonna do that, we expect an intermediate high to be taken out into, where is my line? So we'd expect this high to be taken out by price running past it into that bearish order block, okay? And then we could see, something like that. Maybe price will drop down again, or it will still respect this month's high and week high, and then finally give us a setup to go along. Who knows? Okay. But this kind of scenarios, they're very tricky. and I will call it tricky because I still have this weak high that is very close. You know, this level, there's a bullish order block there. There's a monthly high. There's a weekly high. Prices dropped into it. It is very suspicious. Okay, but everything will be solidified by the moves on USD. USD, when we get to look at it. Okay. Next one we want to take a look at is USD CAD. Uni. Okay, let me clear the chart for you guys. Okay, let's go. This USD CAD is a very, very funny one. I'm so suspicious of this level. I believe you would want to come for it, and I'll tell you why. If I draw your attention to this low, 2nd of March low, and 8th of June low. Okay. Okay. So look at this. If I drop my line here to this low, what do you see? That low and that low. It's a double bottom, right? And take a look at this. This week, 24th of February, has no wicks below it. Yeah. To me, this spells danger for USD CAD. I will be highly suspicious of a bearish move for them to sell. Why? Because for a long time, that low was untaken and price came back to that exact level, didn't take that low out. So now we got a long standing double bottom. So these lows have been there for the past, excuse me, has been there for the past few weeks. 1, 2, 3, 4, 5, 6, 7, 8 weeks. Okay. They've been setting up the retailers here for the past 8 weeks. Okay. They came down, they didn't take that low out. So the people that got this trade long they would have moved their stops there. Okay. The people that got this trade long, they put their stops there. Now they're coming for them. Excuse me. So if we knowing that, if we then go down to the to our daily. Sorry, let me check something on the weekly again. I was looking at this today, but I didn't trade it. I'd already done 2 trades. Um, so these lows are very significant as well. Look at double bottom and look at how they took them out. They're going to do the same to this. The way they took these double bottoms out, okay? So the week 2nd of June and the week 6th of July, they will do the same for the week 8th of June and the week 2nd of March. Okay. So what I suspect is they're going to come down short. We can write that by looking at a few things on the daily time frame. And the very first one would be a significant level, a key level. There's a high over previous days that was taken out. Look at these highs. So the high of the 24th of July was taken out on Thursday, and since then, price has been meandering down. Okay. And another thing that would give me a lot of confidence to take this trade short is guess what? On the daily time frame, look at this. They can't hide this from you guys. Okay, look at this lows over here. 1, 2, 3. Okay, they're almost and if not all equal. And what do they do to equal lows and equal highs, guys? What do they do to them? They will take them out. And that is why I believe the drive south for USD for USD CAD is still in play. Okay, so we'll still be looking to go down and get this level 1.33131. Yes, Gerald, take them out. Okay, so guys, this USD I believe is going down. Okay, so we move to the next chart. Shut the door, please. Okay, so next up, USD CHF. Let's clean out the chart again. Guys, I would like you, one of the ways that I learned when I was watching the videos and stuff of trading, just wanted to chip this in, was I would get my laptop out exactly as the trainer was doing it. I would be copying the trainer. So I'll literally, everything he does, I'll be doing it. When he draws a line at a particular place, I will do the same. When it puts a, trend line, I would do the same. Everything. That's what I did. Okay, and that's how I became good. I would advise you: is not everything you might be to assimilate just watching, but if you do active watching, like so, as you see me do, you're listening, you're taking notes, you're marking your chart, it will stick better. Okay, all right. That said, I got this the 1st of June 2015 low. I got February 2018 low that price was going for. Why? Because it had a double bottom. Look at its price here. March 2020 and February 2018, the levels were equal. And what do they do to equal bottoms and equal tops on any time frame, day from daily upward? They always take them out. And that's what they've done. They've taken them out, okay? But as they took them out, there was another level that was very close, which is May 2015. Okay, look at that. They decided to come for those as well. All right. So that's the first thing first on the monthly. And if we went on the weekly, last week closed way below previous week, 20th. Okay. And I will mark some significant key levels. So the low was taken out in March, and then the weekly low that we have closed below 20th of July over there, right? Plus last week's high. Last week's high. That's another nice key level. Okay. So look at the way I just picked those key levels. Okay. And then you can see this week, Monday, as Monday happened, it rallied to that high. Look at today, went for it. Last week's high. It went for last week's high. And as it got there, you can look for some trade. I looked for some trade at the bottom here because of that significant low. Okay. Um, you could have got some trade here, but I will be more confident if I had an engulfing bearish engulfing day. Okay. So which could happen from Tuesday possibly. If we then drop the H4, let's see, do we have set up on H4? Okay, on H4, we've been trading this down for a while. Okay, look at why they took the top. Look at double top. So those 2 days highs were very close to each other. So that's a double top. They took it out into what? Can you see this H4 bearish order block? Remember the assignment I gave you some time ago for you to look for stop hunts into order blocks. Look at that. Beautiful. Took it nicely. Nicely taken. They took out those double highs, intermediate level highs. Boom, taken out, and then they're driving south. Where are they going? Could they be going further south? I would need to see. Let me check the daily. Let's check the daily. Okay, so we're here now. If possible, we just took out this level. So the levels we could be looking for would be here. Pardon the screen. Let me just, because we need to look a bit further back. Yes, on my chart, I've marked this level for possible area of retracement. If they're going to be dropping further, I think they would drop up to this level. So they've gone past this now. Where we've come here, we've taken that level, we've gone back up, retrace, and they're looking to come back down. I would, I'm thinking strongly that it will come to that level. Okay, so if euro keeps going up and pound keeps going up and USD CHF is dropping, it's an inverse correlation. So what I can see today is going to be closing. It looks like today is going to be closing above Friday's high. Friday, both Friday and Thursday high. So we can have these levels as key levels marked down. Remember, guys, we're not taking trades blindly. We only wait for price to get to those key levels. Okay. When price gets to those key levels, and then it gives us the price pattern, our entry pattern. Okay. So our entry pattern on the lower time frame, once it gives you that setup, then you take the trade. Okay. So it means you wait for all your confluences to line up. So if you have a key level, if you have an order block, and then you start to see your 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 engulfing on the M15 or H1, then you can look to take your trade. Okay. Another good thing about this is this daily looks like a bullish order block. Once today closes above, so that's a rally up. There's a bearish candle there. So this looks like a bullish order block. So yes, it looks like that now, but we are not doing anything until price returns back to it and gives us that our expected or desired price action at this level. Okay, we'll be talking more about these key levels in the next session. Okay, so this is what I see for now. If we go to H4, yeah, we don't have a setup for long yet. We're still going south from here. We called this from time from weeks ago. Okay, based on the H4 setup. Okay, and I mean that Friday and Thursday high is looking really sweet because look, who knows? We have order block at that level. Yeah, look at that. Let me know this one. We have a bullish order block there. So who knows what price is gonna do when it gets to that level? Is it gonna give us a price action we want? If it does, then we should look to take the trade long. If not, just leave it and wait for the next activity that is willing to give us. Okay, because this could then play out to be so the way it's closed here now. This level here could play out to be an intermediate low. Okay, if we go on the H1, okay, it could decide to punt that low into this H1 order block. Guys, you're not trading it blindly. Remember, we are waiting for price to do its thing, and then we will do what we want to do. Okay, so that's what I see here. Next chart, USD Jappy. Yes, Esther, follow the trainer. Okay, for USD Jappy, let us go to our monthly or weekly. I like weekly most of the time anyway. Okay, this is monthly. So it's taking previous month. So it's taking April out, and then price is dropping. If we're looking at monthly, then the next probable level will be this here, low here. So that's March low and July's low. Okay, let's go to weekly. So last week did not close below the previous week, 20th July, but 20th of July closed below 13th of July. And we have some key levels that we can see here. So we have this 22nd of June as a key level low. Okay. And we have this one here, 8th of July, as a key low that was taken out. Okay. Price closed. And one more that we could have is here. Okay. So key levels marked. And you can see today opened Monday. You can see how price rallied up. Let me change this properly. How price rallied up and took out last week's high. Remember what I told you, when you see a weekly candle that does not have a wick on top of it, it's very suspect. They come for it most of the time. Okay, and as you can see, prices rallied to that high, taking out last week's high. Okay, then we then drop down to daily. Okay, we then drop down to daily to see what they want to do. I don't know why I feel like saying this. Someone is could be saying, "Oh man, this is too much. This is too confusing." Just look at it this way. All you have to do is to drop lines at highs and lows. That's it. The first things you need to do. And the reason why you're doing it is because they're key levels. Okay? They're key levels because certain price actions happen around those areas. And those price actions happening around those areas, they're favorable to you. Okay. So don't complicate it, just like you see me do it, dropping lines on those levels. And the reason why those levels are also important is, look at this level, this big bounce up. What do you think will happen? The people that cut the straight going up, they'll put their stops here because they cut this move up. Okay. Look at this bearish move down. Okay. It created a high. The people that got this trade down will have put their stops there. And as price continue to go down, they move their stops there. And that's why we went back to take them. Look, they went back and triggered them. Okay? It's very simple. Don't complicate it, I beg you. Don't. And I think you're lucky because most trading outfit, they don't start by trading their traders this way to look at key levels like this. They just start trading on indicators and all that stuff and all that stuff. Okay. And as you can see, price rallied up on the daily, like we're saying, took the highs out, and something is happening. But now you can see Friday closed above 1, 2, 3, 4. Okay. 3 days, sorry. and that's the closest high that price closed above it. So this is how I frame trades, okay? Like on the lower time frame, right? For me to just possibly get in and out of the market. So I can see that Friday closed aggressively above 1, 2, 3 days. Okay, that's the closest high. Yeah, that's a high. It's a key level. Then I'll just wait. I'm be like, I'll be like, what will price do when it gets to that level? So we could go on H1 to look for what it's going to, do. That what will price do there? Did we get desired price action here on H1? No. So you don't trade it. But look at this move, aggressive move up. Yeah. Israel might say otherwise, okay? But this is a possible setup, okay? Is a possible setup. 1 to 1 hour, 2 hours, close aggressively above this um bearish H1, turning this H1 into an order block. Okay. If price drops back down into it, it will be good to see some nice price action around it and trade it long. Okay. If you went to a lower time frame, we still see something there for aggressive people like myself. Yes. Look at this 15 minutes candle. It closed ever slightly above, engulfs this previous candle, engulfs that, so this bullish candle engulfs this bearish candle. That is a setup for me. I will enter the trade there, and we've been out with maybe 40 pips. Yeah, 40 pips, 50 pips. How many pips from there? Let's count from there. Look, look at the number 60, 67. Let's just call this 70 pips. 70 pips, okay? Yeah, from there, 70 pips north. Okay? That's if you use 15 minutes. If you use the H1, you now be looking for price to come back there, and you'll be looking for a favorable setup on the lower time frame. But on the long term, let's go on the H4. Let's see what is happening on it. It's not looking too bad. Okay, we have this level here, taking out market structure break north there. So if we see something like this, will be a good possibility for coming long to get here. But provided we don't have an aggressive, we're not having aggressive closes, having current day closes to be closing lower than previous day closes. Okay, so we have this level untested yet. You can see this level that I drew out from week ago, that week, so that week and that week low there. So price could look to get there and then do a drop down and come for lower significant levels that we've drawn out. So there's one here, and and then there's last week's low. Okay, so this is what I see on USD JAPI. Gold, I'm gonna leave that. We're not talking about gold yet. um, okay, the line I just deleted now was a key level that we drew some time ago. I think from last week. Okay, so let's go to our monthly. Let's see what US dollar is doing. Instantly, I can see one of the months with no week at the bottom. I'm gonna show you the week now, the month rather. This one has been taken out, but this one over here, and at the same time we have this untested high over here. And what is happening here? This looks like a really nice bullish on block on the monthly, okay? And it's looking like they're dropping to it. So they will drop lower, take out this monthly low into this order block, and then possibly shoot up, go north, okay? Let's go to weekly. So let me drop another level here. So you can see this last month closed aggressively and engulfs 1, 2, 3, like all these lows. The closest one is this. Okay, the closest monthly low was that level that it closed below, and we'll see if they use that level as a sort of springboard to continue their trade south. Okay, let's go to weekly. Let's see what's happening in the weekly. Last week closed aggressively below the previous week, engulfs. Okay, now we have, because of that, we now have this level here is a significant level, key level. And now this is just this what it could do. Okay, can you see the way this level? Let me change the color to red. That level is slightly above last week's high. Okay, so it's a possibility that it could rally, take our last week high into the significant key level. And if we go on the daily, who knows, we might have an order block around there. If you go on the H4, let's see, around that red line area. Oh, guess what? Look, we have an order block, bullish, a bearish order block there. So this could be a nice setup to take people out. Look at this. And now look at today's high already set there and the high of the 20th of July. Look, very close. When they have highs like that, they are likely to take them out. So that means they'll be drawn towards that double top. Look at this double top and then go ultimately for that significant key level on the weekly that correlates with a really nice bearish order block on weekly on the H4. Okay, that'll be a good move. Okay, well, how are we going to take this? Let's go back on the daily. Let's see if we can find something. Right. So the possible way to take this would just be to identify this key level here. So we have this this close and this open, a relationship. They're not that quite close to each other. So I would disregard. Let me see. What's this level price? Oh, I'm not an MT4, would have told me. But they're very, very close. That'll be one level I'll be looking out for. And also be looking out for this level. So if they drop into this level, I'll be looking for some sort of reaction to go long. Okay. But a good reason why I look for a short is also look at this days I was taken out. But why am I gonna disregard it now? Because of this the double top now. The double top that is set up for us here. So if this price continues, and because we've closed above yesterday's high. Let me drop it there. So we've closed above Friday's high. So we could see price rally further up, take out the double top into the weekly significant level, and then we wait for some sort of another reaction to come down because if tomorrow closes as well above, then this daily candle will become a bullish order block. Okay, and then price rally into it. I mean, draw into it, and we'll see where next it can go. Okay, so um, that's what dollar looks like to me at the moment. Okay, I'm just checking other levels. It's taking out. It's taking out This level. Oh wow, this is beautiful on the daily. Can you see this intermediate low on the daily? Look at this bullish order block. Draw it out. Bang. Look. So could we be seeing a reversal now? Yeah. But remember, we identified a weekly order block here. So would this one be sufficient for them to drive market back up? It's a possibility. Okay. And one of the first signs is today's daily candle closed. Yesterday's candle, which is Monday, closed above Friday. That's one very good reason. Okay, one very good reason to go long on US dollar. Okay, I hope you guys were able to get something out of this. So those are the levels I'll be watching on US dollar, on USD JP, CHF, USD CAD. Okay, I wish you all the best, guys. Have a good evening.